Guys, NIO stock right now is more undervalued, more cheap than it was back in 2019 when it had the all-time lows. Let me explain. So I got some very interesting information for you. So right now the market cap sits at $8.95 billion. Back then, all right, back in 2019, during the lowest point, NIO had a market cap of 1.55 billion, and that was during a period where they had quarterly deliveries of 4,799 in third quarter of 2019. They had only $274 million in cash. So if you minus the market cap by the amount of cash, 1.55 billion minus 274 million US dollars, then market cap minus cash, you get 1.276 billion. That's the value of the company without cash, minus cash. But what is it right now? Now 8.95 billion with quarterly deliveries of 30,053, much better than before. In Q1, cash was 8.1 billion at the end of Q4. So that means 8.95 billion minus 8.1 billion in cash, you get 0.85 billion. You heard that right. Right now, the company minus cash is valued at 0.85 billion right now at this moment, whereas back in 2019 when NIO stock was at 1.7ish at the very lows, the company was valued at 1.276 billion. All right? That is almost 40% higher valuation than it is right now. You heard that right. Value of the company minus cash is 40% cheaper than what it was back in 2019 when NIO stock was at the very bottom. This is absolutely nuts, guys. You don't have to be a rocket scientist to know that this is extremely undervalued. Having that said, yes, the stock could go down more. Right? We've heard the news of the whole entire Iran-Israel drone thing, missiles. Everything's dropping. All right, crypto. You can expect commodities. You can expect stocks to drop as well. Okay, but those are external factors. But in terms of valuation-wise, NIO is extremely undervalued. Now, I also want to talk about what the future really holds for NIO. Why should investors be in for the ride? Is there any green to be expected in the future? Of course. All right. So here on my Discord, MS pointed out something very interesting. The fact that Envo will be 900-volt architecture, whereas NIO's current vehicles are all 400-volt architecture. Very interesting. And he's pointing out the fact that once the Envo car comes out, the NIO cars might be more difficult to sell. And whilst it is true, NIO hasn't really prioritized fast charging so much on the second gen platform because of the fact that there's battery swap. Battery swap is always going to be faster than fast charging, and NIO always advertises that. But at the end of the day, it is also a spec that NIO is sort of behind. But the contrarian argument to this is, of course, the fact that Envo, having that 900-volt architecture, having battery swap, having all the features that you want, a customer wants, big screen, comfortable seats, fridge, nice design, very good design, and the price is going to be cheaper than the Model Y, that just means that car is going to sell like hotcakes. The other way to think about it is, even without 900-volt architecture, NIO already has a 45% market share of the luxury premium EV market. Imagine if they did, all right? If they did, they would, of course, sell slightly more than that. And then you also have the sub brand, which I am assuming will also sell tremendously well because it's also going to be able to do battery swap. So we as investors, we've sat through all the cash burn and R&D to build these two brands, but are we going to miss out on when they're starting to sell those cars and reap the rewards just out of fear and desperation, like some of the bigger hedge funds are? Some of the bigger hedge funds, they're selling because of the fact that maybe the stock price is a bit too low and they can't have a stock that's very low in terms of share price on their portfolio just by the way they set that rule. Like maybe some hedge funds can't have a stock under $5 per share. But that is something that you should really ignore. Having a low share price and having a very extremely undervalued company doesn't really show the picture of where this company is going, where the company is at. Once again, the company minus cash, market cap minus cash, is at $0.85 billion. It's just absolutely absurd. $850 million. Of course, some of you guys will argue that cash burn, NIO's cash burn is quite intense, $600, $700 million per quarter. NIO is going to potentially burn through this in no time, and that will be the argument that a lot of people have. But you have to understand that they already did a lot of the R&D work. And even though NIO CEO said that R&D expenses is going to be about the same as before, all right, he said that. Yes, he did say that. But we've heard the CFO, and also logically speaking, they've already done a lot of the R&D work to build those two car companies, the two sub-brands. So it's more about reaping the rewards. And also in the earnings call, the CFO did say that CapEx will be lower because they're getting third parties, partners to build out those swap stations. And we've seen these big government, state-owned power grid companies commit to building these swap stations. And these will be basically another reason to buy a NIO or a NIO sub-brand car. And to be completely honest with you guys, NIO has zero chance of going bankrupt because of the fact that it's so valuable to the government, and the fact that Hefei government made a killing last time they rescued NIO back in 2019, back in late 2019 or early 2020s with that asset swap package, which was just absolutely fantastic. NIO has also been a huge employer for the Hefei government to get jobs and talent into the province. So at the end of the day, they're going to be able to, of course, seek help from Hefei government again if they want, if they really come to that, which I don't think they will. But then the Hefei government will be definitely willing to do another one of those asset swap deals. It's a no-brainer. It's a no-brainer for them as well. On top of that, you could totally see even state power grids, these wealthy, very wealthy, government-owned state companies, the energy companies, invest in NIO, take a portion of NIO just for the fact that they have all the swap and charging infrastructure and be a part of NIO because they have a ton of money and they can spend it wherever they want to. All right, and NIO has very good relationships with all the higher up people at these energy companies. So that's also another area that NIO can lean on if that becomes necessary. There's something very important to understand, and it's the fact that the stock price doesn't really care about valuation, and most investors are driven by emotions. Very short term, medium term, the stock price is like a voting machine, famously said by Warren Buffett. More sellers, it's going to drive the stock price down. More buyers, going to drive the stock price up. There might not be rationale behind the stock price movement, and thinking about it logically, it's not very rational to value the company at 0.85 billion minus cash. So everything is driven by fear, and it's the fear that's pushing NIO stock price down. The pessimism within the investment community that thinks that NIO is burning too much cash and it's a very bleak future. There's nothing in the future for NIO. They're potentially going to die out in a few years. That's the bearish statement that they're relying on. But the truth is the complete opposite. They're coming out with the sub-brand, the sub-brand. They're absolutely going to explode in terms of sales and deliveries, probably maybe even 10x their sales and deliveries. If they become like, look at the numbers that BYD is delivering, like 40,000 per week. How crazy is that? Per week. Now, if NIO has a competitive product that goes against that and has battery swap, which is the ultimate solution in the electricity age, it'll be a very interesting proposition. People would potentially buy in a NIO sub-brand car, and it's affordable. And with BAS, it's going to be affordable by everyone. So it's just a complete no-brainer. Investment community is thinking things are going downhill. It's going to be the end soon. Whereas the reality is we are in store for some very good things that are happening in the next couple months and years that will really help NIO just raise their deliveries to the stratosphere in terms of deliveries and also revenue. So, people are thinking doom and gloom. The reality is we are going to lift off. So I think the best thing for investors to do would be to not get too emotional and revisit why you bought into this stock and see if it's still valid. All right. Remember, the stock right now is cheaper than it was back in 2019 if you subtract the cash, which is absolutely crazy. You're asking me, do I buy into this company? I'm already all in. I'm going to get more money and buy even more. It's a no-brainer, guys. It's a no-brainer. Why did people buy NIO stock in when it was at $50, $60? Because they thought the future would look bright for NIO. But why did they sell NIO stock right now? Well, because they think the future is bleak for NIO. So, I ultimately still believe in the future of what the future holds. But what you do is up to you. As always, stay safe, stay healthy. Peace out.